There's universal consensus generally everywhere in the world across all parties that Bitcoin is a decentralized global asset that has value. It is without an issuer, and it is a digital commodity. In fact, it is the gold standard of digital commodities. So you study Bitcoin to figure out how to create a digital commodity.
MicroStrategy's founder and executive chairman, Michael Saylor, recently restated the company's unwavering commitment to accumulating Bitcoin, the world's leading cryptocurrency. During a CNBC interview, Saylor discussed the successful outcomes of their Bitcoin strategy over the past 3 years and the harmonious relationship between MicroStrategy's Bitcoin and software divisions. In the second quarter of this year, MicroStrategy, primarily a software firm, posted impressive financial results with a net income of $22.2 million. This marked a significant turnaround from the $1.1 billion net loss reported in the same quarter of the previous year. In line with its dedication to expanding its Bitcoin holdings, the company purchased an additional 467 Bitcoins in July, amounting to $14.4 million. This acquisition elevated MicroStrategy's total Bitcoin stash to 152,800 Bitcoins. Looking ahead, MicroStrategy has disclosed plans to increase its Bitcoin holdings further. The company has filed with the U.S. Securities and Exchange Commission to sell shares of its class A common stock, intending to generate $750 million. These funds will serve various purposes, including acquiring more Bitcoin, reinforcing working capital, and potentially addressing existing debts, depending on market conditions. Saylor discussed these strategies and more, including the potential of a spot Bitcoin ETF and the regulatory landscape's impact on cryptocurrencies, in his CNBC interview.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
The operating company provides diversification for investors versus the volatility of Bitcoin, and it also allows us to borrow money very cheaply. Our blended cost of capital is like 1.5%, and we're able to invest that money into Bitcoin. And on the other hand, our Bitcoin investment Bitcoin itself is up 145% since we started buying Bitcoin. And that Bitcoin position creates the volatility in the stock that allows us to borrow and raise capital cheaply in order to buy more Bitcoin and grow the business. But we go through successive cycles of leveraging and deleveraging. We've been deleveraging now, and generally our decision about whether or not we leverage or deleverage is a function of the market opportunity and what we think is most accretive for our shareholders. There's a growing consensus that Bitcoin is a unique and valuable international asset, and that's being endorsed by politicians. It's being endorsed by regulators. It's being endorsed by investors. You're hearing money managers like Larry Fink say this. And that has created a change in sentiment. You know, the odds of spot ETF being approved were 1% 6 months ago. Then they went to 50%, and this morning they were 65%, according to Bloomberg analysts. So that's really driving the near-term sentiment. But plus the fact that there's so much chaos in the crypto industry, Bitcoin is emerging as the safe haven institutional asset if you want to play this space without trying to parse through the politics, the legal, and the regulatory complexity.
Would a spot Bitcoin ETF be good news because it's a tied?
Well, I think a spot ETF is great news for the space. Bitcoin, you could think of as this beautiful house in a scary neighborhood that you have to pay for in cash, takes a year to buy, and you can never rent it. The spot ETF is like that same beautiful house in a nice neighborhood, and you can buy it tomorrow, no money down, and you can rent it and refinance it from your bank. It's not a threat to MicroStrategy. MicroStrategy is like that beautiful house with 10,000 acres of ranch land behind it that generates cash flow, that has a management team that can borrow money at 1-2% interest in order to develop the land. So we offer yield and we offer leverage through active management, which is unique for a set of our investors. We obviously don't have room in our capital structure for tens of billions of dollars of sovereign wealth or major hedge funds, so they need a spot ETF in order to take a position in the space.
In a recent conversation with Bloomberg, Saylor delved into his perspective regarding a spot Bitcoin ETF and its potential impact on MicroStrategy. He pondered whether such an ETF could pose a threat to the company's appeal for investors seeking Bitcoin exposure. Saylor expressed confidence that MicroStrategy would maintain its allure due to its distinct position as an operational enterprise, enabling leverage that an ETF couldn't provide. He likened MicroStrategy to a sports car in contrast to the spot ETF's comparison to a supertanker, emphasizing their different capabilities. Furthermore, he highlighted that a spot Bitcoin ETF could facilitate substantial investments from major hedge funds and sovereign nations into the primary cryptocurrency. Transitioning back to his CNBC interview, Saylor explored several topics including Bitcoin's price trends, MicroStrategy's advancements in AI, and his stance on the regulatory landscape of cryptocurrencies in the United States.
I think looking back 3 years is very clarifying. 3 years ago, Bitcoin was about 10,000. And so if we look at the 3-year chart from August 10th of 2020 to today, Bitcoin's up 145%. The S&P is up 37%. The S&P is the cost of capital. Gold is down 3%. Bonds are down 18%. MicroStrategy is up 254%. And our enterprise value has increased by a factor of 10 by $8 billion or something. So we're glad we adopted Bitcoin. We would say that Bitcoin is returning 4x the cost of capital. And if you're not getting 37% gain in those 3 years via the S&P, then you're not keeping up with the cost of capital. MicroStrategy's got a lot of options, a lot of opportunities to harness AI, and we're bringing out a new product based on AI shortly. So we're excited about that. What I'd say about AI is devaluing assets that are created with pure information or white-collar type straightforward labor. And AI is going to accrete value to assets that are energy rich. That acre of beachfront property in Palm Beach that an AI can't create, Bitcoin AI can't create. And ultimately, Bitcoin is the solution to a lot of problems AI creates. And if I was looking at the AI revolution, I would think, how do I buy scarce, desirable assets that the computer can't spin out of thin air? And if you own those, then you're going to be good, because the stuff that the AI creates in a split second, that's going to get devalued. Well, MicroStrategy's been in the business intelligence business for 30 years, and we brought this AI module to our customers recently. There's a lot of enthusiasm about what we can do. Anybody using MicroStrategy software is trying to sift through billions of lines of data to get an insight to run their company or their organization better. AI does a good job of joining with our software and our proprietary semantic graph in order to get them that answer faster and quicker. We think this is going to be really good for the business intelligence industry, and ultimately it's just going to make every enterprise more nimble, more agile, more intelligent.
Of course, I want to ask you about regulations. Can the case be made that Bitcoin is a commodity and doesn't require the same regulation as everything else, or is it coming?
There's universal consensus generally everywhere in the world across all parties that Bitcoin is a decentralized global asset that has value. It is without an issuer, and it is a digital commodity. In fact, it is the gold standard of digital commodity. So you study Bitcoin to figure out how to create a digital commodity. There's also pretty general uncertainty and conflict and controversy surrounding the role of crypto exchanges, stable coins, digital securities, tokens, and DeFi. I don't think that uncertainty is going to be resolved anytime in the next 2 years. And the chair of the CFTC is correct in saying we do need a political solution coming from Congress. It's pretty clear that there's not going to be a quick solution coming directly from the regulators or organically from the industry. So we're waiting for political leadership to resolve that ambiguity. Meanwhile, Bitcoin is the one unambiguous thing, right? It is the most certain thing in a very promising, innovative economy, but full of regulatory uncertainty. And so if you want to participate in the space, the way to do it is with Bitcoin.
Following the most recent Bitcoin acquisition, MicroStrategy's holdings have surged to 152,800 Bitcoins, obtained at a cumulative cost of $4.53 billion. This translates to an average of $29,672 per coin. Notably, during the second quarter of this year, the company procured 12,333 Bitcoins, marking its most substantial increase in holdings within a single quarter since Q2 2021. Andrew Kang, the chief financial officer of MicroStrategy, attributed this significant boost in holdings to several factors. These encompass rising institutional interest, advancements in accounting transparency, and the steady clarification of regulatory frameworks governing Bitcoin. We welcome your insights on Michael Saylor's interview. Please feel free to share your thoughts and opinions in the comments section below regarding the discussed matters. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.